Hi, hello guys. How are you all? Would you like a detailed background of Tamil Pay technology architecture or Tamil Nadu government policy draft for its approval? Can Tamil Pay bypass GST system? No, Tamil Pay cannot bypass GST because GST goods and trade services is a central tax under Indian law. All transactions in India, whether done through cash, digital payments, or barter, must comply with GST regulations. However, Tamil Nadu could explore legal ways to reduce GST impact for local businesses using Tamil Pay. Let's break it down. Why Tamil Pay cannot legally bypass GST? GST is a central law, Article 246 of Indian Constitution. GST is governed by central government and applies across India. Tamil Nadu cannot exempt a transaction on Tamil Pay from GST. They cannot exempt a transaction in Tamil Pay from GST because GST is collected by both center and state. GST applies to all forms of transactions. Whether you pay in cash, UPI, bank transfer, barter, or digital wallets like Tamil Pay, GST is applicable. Even if Tamil Pay was state banked fintech, it must comply with GST rules. Tamil Nadu cannot modify GST rates independently. GST rates are set by GST Council, where Tamil Nadu has a vote but cannot change tax rates alone. Tamil Nadu tries to remove GST for Tamil Pay transaction, it will become unconstitutional. Legal ways to Tamil Nadu can reduce GST impact for Tamil Pay users. Provides state-backed GST subsidies on Tamil Pay. Tamil Nadu cannot remove GST but can refund a part of GST for businesses using Tamil Pay. Example, if a small business pays 10,000 rupees GST using Tamil Pay, Tamil Nadu government could offer 20% cashback on GST paid as an incentive. Promote Tamil Pay for GST free transaction exemptions exempt categories. Some transactions are already GST exempt, like machines food like rice, wheat, vegetables, milk, education and healthcare services, government welfare payments. Tamil can promote Tamil Pay from these categories, ensuring users get GST free transaction where legally possible. Encourage local B2B bartender to minimize GST. While bartender transaction must follow GST, Tamil can legally structure B2B exchanges where small traders swap goods and services within Tamil Nadu before final GST applicable sales. Example, a weaver gives textiles to a local tailoring company in exchange for stitching services without immediate cash payment, reducing taxable cash transaction. Special GST relief for MSME using Tamil Pay. Government can lobby for special GST relaxation for MSME, micro, small and medium enterprises if they use Tamil Pay. Possible policy proposal. Tamil Nadu could ask the GST Council to lower GST rates for business using Tamil Pay, similar to composition scheme that it gives small business tax reliefs. Use Tamil Pay for state government transaction, whereas GST doesn't apply. Tamil Nadu can increase Tamil Pay usage in government contract subsidies and welfare payments, reducing GST burden on local businesses. Example, paying government service providers through Tamil Pay instead of traditional bank transfers. What if Tamil Nadu tried to remove GST on Tamil Pay? Illegal consequences. Red. If Tamil Nadu tried to exempt Tamil Pay transaction from GST, central government could declare Tamil Pay unconstitutional, block Tamil Pay transaction through RBI regulation, impose penalties on business avoiding GST via Tamil Pay, trigger a legal battle between Tamil Nadu and center. Final verdict: can Tamil bypass GST? No, Tamil Pay cannot legally bypass GST. However, Tamil can use legal strategies like tax subsidies, exemptions, and goods barter models to reduce GST impact for Tamil Pay users. Tamil tried to bypass central government union could take several legal and financial actions against state. Conflict between Tamil and could escalate constitutional crisis with serious consequences. Tamil Nadu refuses to collect GST on Tamil Nadu and creates Tamil Nadu only tax system separate from GST, defies RBI regulation, making Tamil Pay an alternative currency. Then central government may step in legally. Steps the central government could take action. RBI and Financial Ministry could block Tamil Pay. Center could order RBI to block Tamil Pay transaction, making it useless in banks and online payments. GST Council could take action where Tamil Nadu has only one vote, would declare Tamil Nadu's action illegal. Tamil Nadu business might lose GST benefits like input tax credit, making trade difficulty. Central government could file a case with Supreme Court. The Attorney General of India could file a case against Tamil Nadu in the Supreme Court under Article 131, which deals with the disputes between state and central and states. The Supreme Court would likely rule in favor of states since GST is central law and Tamil Nadu must follow it. Economic pressure on Tamil Nadu. Financial Commission decides how much money each state gets from central tax. Centers could reduce Tamil share of already share of tax revenue, cutting state funds for welfare, service and infrastructure. Presidential under Article 356 extreme step. If Tamil Nadu refuses to follow Supreme Court orders or continues violating financial laws, Center could dismiss Tamil Nadu government using Article 356 presidential rule, temporarily take over state administration, appoint governor to run the Tamil Nadu, hold fresh elections to install a new government that follows the law. What can Tamil Nadu do to do it? But legally, file a case in Supreme Court. Tamil Nadu can challenge center's decision by arguing states should have more financial freedom under federalism. GST unfair to Tamil Nadu. Tamil Nadu contributes a lot in tax but gets released in return. Step 2, demand a special GST exception for Tamil Nadu. Tamil Nadu can negotiate within GST Council to get lower GST rates for Tamil Nadu based businesses. Tax rebate for MSME using Tamil Pay. Step 3, political pressure and alliance. Tamil Nadu can gather the support from other states like Kerala, West Bengal, and Telangana, which also want more financial freedom. It can form a state alliance to demand GST reform from center. Depending on components, most likely result center wins legally because GST and currency regulations are controlled by Parliament, RBI, and Supreme Court. Tamil Nadu can create its own financial system outside India law. Best possible result for Tamil Nadu could negotiate special financial benefits within GST instead of violating it. Conclusion: can Tamil Nadu win illegal but against center? Legally, no. Supreme Court could rule in favor of center. Economically, Tamil Nadu can push for GST benefits through political negotiation. Extreme consequences: Tamil Nadu center could impose presidential in Tamil Nadu, defy Supreme Court orders. So, very no stream until then, take a see you all. Peace.